Investments in the economy decreased, indicating that the depressed investor confidence and constrained finances at state-owned companies does persist. The latest quarterly bulletin from the South African Reserve Bank shows that real gross fixed capital formation decreased for a third successive quarter this year. Capital spending by private business enterprises and public corporations also then contracted quite notably. Private sector fixed investment was weighed down by reduced spending on transport equipment and non-residential buildings. The marked decline in capital spending by public corporations reflected the constrained financial position of many state-owned companies. The country's foreign direct investment inflows, as I said earlier, falling by nearly 3 billion rand in the third quarter. The Reserve Bank says direct investment liability fell to about 28 billion, and that was from 32 billion rand.
The thing that stood out most for me in these latest figures is the decline in the share of capital investment in the overall economy to its lowest level in 13 years at 17.7%. This is moving in the completely opposite direction from what the National Development Plan envisages to get this economy growing faster. The less we invest in infrastructure and productive facilities, the less we are going to be able to produce in the longer term to supply our community, and the more we will depend on imported goods to supply whatever products are needed. And that implies a bigger current account deficit in the longer term, and through that more vulnerability to volatility in the exchange rate, and probably a lower exchange rate as well.
That's Dr. Azar Jameen, chief economist there at Econometrics, talking about that foreign direct investment there falling by nearly 3 billion rand.